Hi, I'm Nick Stebbing, Chief Operating Officer at Fairstone.
Yeah, hi, I'm Ed Stanley. I'm the head of product at Fairstone. You know from your friends and your circle that people have different attitudes to the same scenario. You know, that certain people are comfortable, going on that holiday to the place that no one's ever heard of. They want to do that. They don't see things as scary or risky. They see them as exciting and they recognise an opportunity. Whereas other people, that's the last thing they want to do. You know, they would much rather have the certainty and comfort of knowing that they're going back to the place they've been to before. They're going to have a great time. They know what they're going to get there when they get there, and that's fine. So a lot of it's built out in terms of personality. Now, your advisor is going to go beyond that in terms of building a portfolio. They're also going to be talking about, well, what do you want to be doing in 20 years' time or 30 years' time? So what are your goals, and maybe how that's shaping the way that you need to think about your investment journey. So it's more than just that.
Typically, we see investors overly wary of risk. There is normally a correlation between the amount of risk you take and the amount of long-term returns. What risk can do in the short term, you can create portfolios that say go down in value, and we understand that that can be nerve-wracking for people.
So, for example, someone starting their investment journey in their 20s or 30s may well want to take more risk than someone who's approaching retirement, is beginning to think about how they, tighten up that nest egg and think about those things they want to do in the future.
So the risk rating for a client, normally what we will ask a client to do, both when they first join Fairstone and after they've been here for a couple of years and on an ongoing basis, is to answer a short survey, which we call the attitude to risk. That will give us an idea of what your personal amenability to portfolios going down, for example, is. Riskier portfolios tend to have a higher number attached to them. What you will then do normally is discuss it with your advisor. That's not just an answer that the advisor should therefore, because your attitude to risk is balanced and therefore something around a 5 on our scale, would mean that you would automatically go into a 5 rated portfolio.